Good evening, everybody. Today is Sunday, July 6th, 2025. Hope you had a good holiday weekend. We're safe and had some fun. So, these markets, let's take a look. I will share the futures chart to get started. And as always, I'm slow on this. So, let's take a look here. Here we go. These are the futures. On the upper left is the S&P 500 futures. And all last week, all the last 2 weeks, we've been above this rising 5-day moving average. So it's innocent until proven guilty, and we remain, excuse me, above that rising 5-day moving average. So the benefit of the doubt still goes to the buyers in the S&P and the Nasdaq. You can see we slightly undercut the 5-day moving average right here, but the 5-day moving average was rising. Now, shorter term, I've got a 5-minute chart on the right. And what you see here is this blue. This is the session. So this is what we just started at 6 p.m. Eastern here. And looking at that, the market gapped up. So you would think the market is going to gap higher on Friday. However, when the market closed on Thursday at 11:10 a.m. my time, 1:10 p.m. Eastern for the futures, they closed right here. What we saw was they then continued to sell off on the 4th of July, or they started to sell off. So on the 4th of July, as the futures markets were open, and now we have the markets. So we're below where we were by about a buck and a half on the SPY. So not a big deal. We're still, as you can see in here, above the 5-day moving average. So I'm not concerned about a little bit of profit taking. Looking at Bitcoin, it really just feels like it's ready to get going. As I've mentioned, I think last week, I am 100% invested. I'm as bullish as I've been on Bitcoin for a while. We saw this pattern in here of these lower high. We saw this high. We saw a lower high. We saw a low, a lower low. Then we saw this higher low, and now it looks like we're getting ready to break to an all-time high. I'm not going to make a big fanfare about it, like I said last week, about big projections in terms of upside and that sort of thing. Instead, I'm going to say I'm bullish. I'm as bullish as I've been for a while. My crypto account is 100% long, and let's see what the market gives us. If it comes back down towards this low right here at about 105, then I might consider trimming my position a little bit in case that leads to a bigger pullback, maybe down towards the 102 level. I don't think that's likely, but I also think it's foolish not to have a plan for just in case what if we do pull back a little bit deeper in there. So let's take a look now at, actually what we'll look at is um, let's take a look at the week coming up, because we've got really a pretty quiet week here. When you look at the earnings, there are none on Monday before the market, after the market, or Tuesday before the market opens. After the close on Tuesday, we've got a few of them. AEHR looks interesting. Wednesday, nothing before the open. Two, inconsequential companies in terms of their market impact, not to, if you're a shareholder, of course. And then Thursday, things start to pick up a little bit. Friday, no earnings at all. For the economic calendar, what we have here is nothing on Monday and Tuesday. So it's going to be nice that there are no earnings or big economic numbers. Who knows what's going to happen with tariffs and new deadlines and headlines and that sort of thing. That's always an issue. But no economic news for Monday or Tuesday. And then 2 p.m., we have the Fed minutes on Wednesday. So just be aware of that at 2 p.m. Eastern time if you see some volatility in the market. Or be prepared before 2 p.m. to say, hey, we might see a little bit of volatility based on the Fed minutes. And then Thursday morning, we have the jobless claims and nothing on Friday. So pretty quiet week overall. I didn't check the IPO calendar, but I wouldn't be surprised if we don't have any IPOs this week. Let's take a look at the markets here, the equities markets, that is. And of course, the S&P 500 is at a new all-time high. If you take a look at, like I said, where we would be on the equivalent for the SPY, we're down a buck and a half from Friday's close, so that puts us, basically right down here. Nothing significant at all. We saw the break of the new all-time high this past week, and we had every single day, pretty much making a new all-time high. We had one inside day there on Tuesday, Wednesday, Thursday were big up days. We're getting extended in here, and that doesn't mean it has to pull back, but it's just something to be aware of, that we're a little bit extended and the possibilities are there for a pullback. I don't see it as, if we were to see a pullback, as something damaging to the market. As long as we're above that rising 5-day moving average this week, then we will continue to treat this market as innocent until proven guilty. By the way, thank you for joining me on these Sunday webinars. I've been doing them since, I think, about mid-December of last year. I know for sure January. So pretty much the last 6.5, 7 months. This is going to be the last one. This is the final Sunday evening. I've got some other things going on for subscribers, and the $10 a month subscription to Twitter, they're going to start to see a lot more value with a weekly webinar in there. But anyways, I'm not here to sell you guys. I'm here to give you some information that will help you. But keep that in mind if you have gotten used to this type of analysis each week. Let's take a look at some of the large cap stocks. Amazon is moving higher. As I mentioned, I'm long some of this, and it's just, it's grinding higher. It looks like it's most likely going to head for new highs. Now, it doesn't mean that's going to happen quickly. I probably would have said the same thing, and I think I did say the same thing right here, that it's headed for new highs. But it's not going to be straight line up there. We're going to see some volatility and some pullbacks, and I'd love to see it pull back so I could get a bigger position at a lower risk point and then do something like that. But Amazon clearly looking good. SMCI has been a difficult trade in terms of the volatility and the gaps in here. This one, however, is still looking like it's heading most likely for a test of the anchor from the all-time high. That would put this up near about $55 per share. The problem is that it's not likely to be an easy, smooth line up towards there, especially when you look at the personality of this stock. So SMCI I'm bullish on. I would say if you're involved in this one from a swing trade perspective, your worst case stop probably goes underneath this level right here. Apple is doing what it's supposed to do. We spoke about this one last week, I believe, and then I had put this on Twitter on Tuesday saying, if it gets above here, then we want to be long the market. So it was a week ago Friday that it had some news. It rallied up, and then Monday and Tuesday of last week it consolidated. Wednesday we saw a gap up. It was a perfect chase the gap, or I don't think it was actually chase the gap or wait for view up. Either way, this is where we began that new move, and my current stop I have under here and here. The thing about Apple is, I'd say be very careful about chasing Apple right now, simply because if you look at the stock, in the past we had this big prior band of support in here, and that has, of course, as always, the potential to become resistance. Beyond that, we have in here the anchored volume weighted average price from the beginning of the year. That's that blue line there, and we're right up against it. So it doesn't mean we can't continue to move higher, but it's a level of interest that says let's just be careful and ask ourselves, as far as if we're looking for a new position, where has it come from? Well, it just came from $200 a share up to up to $213 per share. So it's rallied basically 7% here in the last 4 days. Where does it have, so that's where it's come from. Where does it have the potential to go before it's likely to encounter a source of supply which might become strong enough to provide resistance? And we're basically right there. So when you ask yourself, where does it come from? Where does it have the potential to go? I'm not going to get excited about it breaking above the anchor from the beginning of the year. Instead, I'm going to continue to say, okay, as far as new positions go, if I'm going to buy a new position, it might be, I would look at it as maybe, adding a little bit here with a stop under there. But for my swing trade, a little bit bigger stop because I have a accumulated position in it. But the question of where does it come from, where does it have the potential to go before it's likely to encounter supply, and then when we answer those two questions, when we look at this stock after answering those two questions, does the perceived reward, is it worth the risk that we see in here? To me, I don't think so. Now, it doesn't mean it might not continue up to the anchor from the election, that's that orange line, or even the 200-day moving average, that's that black line right there. And here we can see that, that black line is kind of where we see that prior band of support. So I'm holding my long. I'm not going to sell just because it has potential supply here. I'm going to hold my long and protect it with stops. But I think it's, you're late to the party here. The move began over here. You don't want to buy it up 7.5% in a couple of days, and as it has the potential to find supply. Tesla, what's going on in here? As we know, the anchor from the April 7th low has been important. Now, it hasn't been perfect, but it's been important for the stock. And these are the three times that we found buyers in that general area. The problem is that we have this high, then we have a lower high, and we have what's kind of looking a little bit like a triangle. It's compressing energy. So maybe it rallies up to here and then tightens up a little bit. I think Tesla right now is it's a great day trading stock, but as far as positioning yourself, I think there's probably too much headline risk right now with everything that Elon's doing and talking about and fighting with the president and things like that. So, and who knows, maybe he's going to hear some shit for the cuts to the weather service because through Doge, people are going to blame him on that. I don't know. I'm not blaming anyone. I'm not blaming anyone. It's not for me to say. I'm interested in price action, and what it seems as though there might be a time when we have more, a heightened potential for volatility like we do now with Tesla. It's probably best left to either day trading or leave it, let it settle down a little bit. Palantir is, in pullback mode right now. It's still got a beautiful pattern of higher highs and higher lows. So, and if we drew kind of a midline to that at that 20-day moving average, it's still in a beautiful longer term uptrend. The 20 is above the 50, etc. We've got a declining 5-day moving average. So I'm not ready to buy Palantir for a trade right now. What I'd be looking for in Palantir, ideally, maybe it's strong on Monday, pulls back a little bit, and if we were to see an anchor off of this low, for instance, that maybe it would pull back to that. Then in a day or two, we would see that 5-day moving average flattening out. And then I'd love to be a buyer of Palantir or maybe PLTU or some call options right here with a stop under there because it's still one of the strongest stocks out there and looks like it should be able to continue to move higher. Nvidia just is a runaway train in here. It had a pullback and it pulled back below the 5-day moving average. But again, what was the direction of the 5-day moving average? That when we see a pullback below the 5-day moving average and the 5-day moving average is rising, it often means it's a shakeout, and that's in fact what it was. Now, on that day, it doesn't feel too good to be down 7 points on it, but it did make a pattern of higher highs and higher lows, and it's back right up at all-time highs. So buyers remain in control there. It's riding the 20-day moving average very nicely right now. It's broken to new all-time highs. So even if it were to pull back a little bit deeper, I mean, if you look at this, it's actually, a breakout, a break of resistance, and this is your retest. So stops should go under there. That should be a level that's likely to hold for a while. Coinbase is likely to provide some opportunity this week. It's a nice tight consolidation here at these levels. We've got a little bit of resistance in this little zone right here. We have what looks like a higher low from Friday's open. So I would say keep a close eye on Coinbase for continued upside in there. And if it were to get going, I would say, something like this, then I would likely put a stop under here, not way down underneath that level. And of course, it's going to have a lot to do with how Bitcoin behaves. And it looks like Bitcoin's ready to get going. So it makes sense that Coinbase would as well. Google is been a little bit squirrely in here. It's had a nice run from 162 to basically 182. So it's just up 18% into this range. It pulled back a little. I need to see Google settle down a little bit before I'm interested in getting involved. It's a little too squirrely in here right now, at least from my standpoint. Microsoft, it's a runaway freight train to the upside, higher highs and higher lows. It's above this rising 20-day moving average. This looks like an important higher low. So as long as we hold that going into next week, I think you want to look at this and say, if you were to get a pullback, maybe to the 5-day, then buy some strength after that pullback instead of stop here for new money trades. That would be a good way to do that. Let's talk about the bond market because, the bonds are still, let's actually look at the weekly chart here. Here's our weekly chart. And we've come down to this range. So we've got a level that's been support in here. Now, there's a saying that I like to repeat a lot, is if they don't scare you out on the way down, they'll typically wear you out. If you look at this, the highs, we still have a pattern of lower highs and actually lower lows. And we've got a declining 42-week or 200-day moving average. So there's your 200-day moving average, that dashed black line. It's still declining. And where did we just have trouble? Right here, right now, this past week. Well, that is, take away that green one for a moment because that's not, but the year-to-date anchored volume weighted average price for the bonds have been pretty important in terms of support, and now a couple days outside of there, but that's the general area they turned, and they found resistance there again. Now that green anchor is the April 7th low in equities. This purple is the anchor from the high. So we're also right at both the thin black dash blue line is the 20-day moving average, and the green dash is the 50. So in this zone right here, what do we have? We have a rising 20 and 50-day moving average. This is where we were 50 days ago. That's why it's rising. Now this week, if we don't rally, if the bonds don't rally, that 50-day moving average will start to decline again. Not a big deal, but just something worth noting because these prices are obviously higher than if it doesn't rally. Now, if we take a look at the anchor off the lows here for the bonds, we've also been holding that. So what we're seeing in here a little bit is that we have higher lows above the 20 and the 50-day moving average. Also, we got rejected at the year-to-date anchor. So we're at a zone that's likely to find buyers. So what we need to do is look to a shorter term time frame and say, are the buyers in fact in control here? So this is a 15-minute time frame with a 5-day moving average. And with nothing else on here, I see this high, and then I see a lower high, and I see another lower high. I see this low, and I see another low, and it's lower than the previous one. And it's happening below the declining 5-day moving average. So we are at a level of interest on the daily time frame for bonds. But if they were to continue lower, it wouldn't surprise me to come down to the anchor off of the low for the bonds in here, and then maybe even get a little shakeout and then start to rebuild. So if you're looking to buy the bonds, I don't think there's a big hurry to do so, because right now we're in a little bit of profit taking mode since the beginning of this month. And sure, it's only a couple days, but still, why buy weakness? Buy strength after the weakness. Buy when we're back above that rising 5-day moving average and the buyers are back in control is the way that I always look at it. So I've spoken, I think we spoke on here last week as well about, we definitely spoke about some IPOs. And I want to talk about Circle again because we're kind of in the same spot we were a week ago Sunday. So a week ago Sunday, where were we? We were right here. That was a week ago Friday's close. Last week was 3.5 days. Anyways, we're right basically in the same spot, meaning, yeah, we're a little bit above it, but we're holding the anchored volume weighted average price from the IPO. And it hasn't been perfect in here. If you expect perfect, then you're looking at the market wrong, because perfection doesn't exist in the market except for fleeting moments. Every once in a while we just nail a trade, get it completely 100% right, but it's the exception, not the rule. So same thing that I always talk about here on Circle. That is what I talk about on the other stocks, is that while it's below declining 5-day moving average, it can get bounces, but those bounces are not likely to follow through to the upside. That's why I think that this rally here failed. Now, if you traded it, it was a great rally, but it pulled back pretty deep too, from 194 all the way down to 177, 176 really. So, that's a pretty deep pullback. And at the same time, that's what's to be expected with a stock like Circle, because if you look at this number right here, this is the percent ATR. So on average, what percent ATR? It makes 18% daily ranges on average. So you've got to look at that and say, these types of this type of volatility it's just normal volatility for this stock. It's not normal volatility for IBM maybe, but for this stock, 18% is not a bad thing, big thing. So where will we be on Monday? Well, we're getting in the 5-day, and here's an extra good reason to look at the volume, to look at the 5-day moving average only on intraday timeframes. Because first thing tomorrow morning, if you're looking at a daily chart and you're looking at a 5-day moving average, what you're going to see at minute 9:31 is you're going to see that 1 minute is 1 day. Then you have Friday's trading, which was just 9:30 to 12, 4.5 hours. So you're missing 2 hours from that day. And then you have 3 full days in your 5-day moving average calculation. So you would have 3 full days, 2/3 of a day, and 1 minute first thing in the morning. With an intraday 5-day moving average, we're looking at exactly where we were 5 market days ago, 390 minutes per day. That is where we were 1,950 minutes ago. So this is your true market 5 days, not calendar 5 days, because it gets a little messy with the half day and stuff. So what we want to look at is say, what gets this 5-day moving average rising? Well, in order to, maybe it gaps up to here, well then it'll start to rise. Let's talk about what's realistic though. What's realistic is, we will see this is what we get rid of in the 5-day moving average calculation through 1 p.m. Eastern on Monday. So 1 p.m. Eastern, I'm sorry, this will end at 1 p.m. Eastern. We're getting rid of this as 1 full day. So at about tomorrow, these are 30-minute bars. So in the last 2 hours of the day, if Circle does something like this, what's going to happen in the 5-day moving average? It's going to stop to decline and start to turn sideways. And then if it does this, then the 5-day moving average will begin to rise Tuesday morning as it gets rid of this data, because this data down here is lower than this data, so that's going to drag the moving average higher. So I think that, Circle, it's got an 18% range. How can you really plan for that? You can't plan for it in terms of, quick entries, but you can. This is what I talk about all the time is I talk about entry techniques. The pullback to the 2-day VWAP, reclaim the daily VWAP, chase the gap or wait for VWAP. These are things I mention all the time for Alpha Trend subscribers, and that are in my books as well. So what we want to look at is a shorter term time frame to get a little bit of clarity here. So here's the anchor from the all-time high in this stock. And when we look at the range, from the IPO low to the high, we've pulled back. This level right here is 50%. So it's retraced 50% of the range. It has stopped going down. It's starting to turn sideways. And if it rallies up a little bit, pulls back and gets going, I kind of like it a lot for a buy over here with a stop maybe under here. And those levels will change. So, don't text me on tweet me on Monday and say, Brian, I bought here. Is my stop still there? My stop might be there. I don't know. But what I'd be looking for, not a price target, but a potential level for it to run up to quickly, where if it, or rather, if it runs up quickly to the anchor from the high, I expect it's likely there will be supply in that area. So it's not a level that I'm looking at as my price target at 220, let's call it. I'm not looking at it as a target of 220. I'm looking at it as it has a reasonable chance to get up to that $220 level if it runs quickly. And if it does, well, I'm going to start to pay real close attention to my, start thinking about exiting some of it, because it's likely to find supply. That is where the average price has paid over, since that move. So we've got price memory in there. And if we take a look at just a horizontal line in here, we're basically in that same little zone, maybe a little bit higher. So what I want to do is I want to look at exit techniques such as, what I had, spoken about in General Motors. When, I call it the 2-minute exit. When you get to a level of interest, let's say this is 220. Let's say it runs quickly like that. Well, I use what I call the 2-minute exit. And the 2-minute exit is something I've been using for the last decade or more. And it simply says when you've got a stock that's running very rapidly, sometimes I'll look to say it takes them off at daily R2. Instead, it just, and if it gets there, as soon as it makes this new trade, then my stop goes under there. As soon as this 2-minute bar closes and it makes this, that's the opening bar. As soon as it does that, my stop is under here. On this bar, as soon as this bar opens, stop goes under there. Now that's not what I did here. Instead, what I was looking for General Motors was on the breakout, because it was had such strong momentum. I thought it was going to break this high, and I love to sell breakouts. That high was 53.29. So as it got up towards that level at 53.29, let's just put a, is that what I said, 53.29? Let's go back there again. No, yeah, the 53.29. So anyways, as it broke out, I started looking at the 2-minute exit over here, and this is where I got out. And pretty much close to the high for the day. I didn't expect to get to the high of the day. That's simply, we're getting extended. It's time to take some profits off. So I would use that same technique to look to maybe lock in at least some gains in Circle. Because who knows, maybe Circle is going to run up to that 220 level, and it's going to go up there, and it's going to pause ever so briefly. Let's erase all this stuff. Maybe it's going to go up to that 220 level. It's going to pause ever so briefly, and then it's going to go right back up like this, make a new high, squeeze the shorts, and then a nice cave in. I'm not here to predict that far, or even, and I'm not even predicting. I'm anticipating what's a likely scenario. And for Circle, I think we've got a very good chance that this stock can see a nice run this week. So I'd say pay close attention to it. I guess we got a couple minutes, so let me talk about some other names. App is a name that I've been wanting to buy, but I haven't bought it. I didn't buy the dip like everyone tells you to. I didn't buy the dip to the 20-day moving average. I didn't buy the dip to the 50-day moving average. I didn't touch the blue year-to-date anchored VWAP. I didn't buy the orange anchor from the election. And I didn't buy the green anchor from the April 7th low. This tells me that we're at an important level that's likely to hold as support. So if you want to be early in the stock when there's no momentum in it, then I think your stop goes under here. The way I look at app is this. The 5-day moving average is declining right now, and we've got a declining 20-day moving average. So this is where we were 20 days ago, right here. 19, 18, 17, 16, 15. So by the end of the week, we'll be getting rid of this data. So ideally, maybe it runs up to this level, pulls back a little bit, and then towards the end of the week, maybe app can get going again. We've got this band of support in here that's acting as resistance, but we're at what should really be a critical area of support. So if it holds above here, I think a stock like app, you're most likely not going to get hurt. Maybe you want to buy some calls in here while it's lower volatility as the range compresses in this zone. If you want to be early, I don't want to be early. I want to see it calm down a little bit, because these ranges have been kind of stupid in here. I want to see it calm down, tighten up, and then maybe be a buyer right here in a stock like app. RBRK is a name that I've had an eye on as well. That it's pulled back. It's been making a pattern here. We saw that high. We saw a sharp pullback. People bought the bounce, and then it made a lower low. We have this high, a lower high. We saw another bounce. It made a lower low, a lower high rather, and then it came down and made a lower low. So the pattern here in RBRK right now is lower highs and lower lows. However, where it made it most recent lower low is right here at the rising 50-day moving average and the anchor off the April 7th low. So I think that RBRK is the type of stock that's likely going to settle in this area. And again, what I'd like to do is see this stock. It's been choppy. So we look at the personality of the stock on the opens. That's an open, that's an open, that's an open. So each day you've got to be really careful when the stock opens. So I'd love to see the volatility kind of start to settle down in here, because these, you can make money day trading there, but if you buy in early for a swing trade over here, this time, you feel like a hero, you feel like an asshole, you feel like you're getting it back, and you feel like a jerk again, and maybe you sold it underneath that low saying, I've had enough of this. I think that it's just best left alone. Let it tighten up here a little bit. When is the 20-day moving average going to start to flatten out in this stock? Well, this was 20 days ago, 19, 18, 17. So this would be Monday, Tuesday, Wednesday, Thursday. So late Wednesday into Thursday, I'm hoping that this is the time to start watching this stock. I will update that for Alpha Trend subscribers and the people who are joining me at Twitter for $10 a month. I'll update there as well. Thank you for joining in. As I said, this will be my final Sunday evening. I hope it's been useful to you, and trade well and have a good week. Thank you.